Today we level up your money game. We reveal the ultimate financial playbook for every income. You see, your money rules are wrong. That is why most people get stuck. They use old playbooks. Yes, it is true that their income grows fast, but their wealth does not. This is a huge mistake, but it is not your fault. The financial game keeps changing. You need to keep up with new strategies. This video reveals these new strategies. We cover 3 levels: $50,000, $100,000, $150,000 plus. You will learn specific steps for each level. We will unlock your next financial stage. This is not just theory, it is practical advice. No more guessing games, let us dive right in. The big secret: why your money game needs an upgrade. What if I told you the biggest money mistake has nothing to do with buying lattes? It has everything to do with failing to upgrade your financial game plan. As your paycheck grows, the rules change. The strategies that help you survive on a lower income are not the same ones that will make you wealthy on a higher one. This one mistake is the difference between scraping by and building real, life-changing freedom. Many people wonder why they are not getting ahead faster. They are using a $50,000 playbook when they are earning $100,000. This video will break down the exact financial plan you should be following at 3 different income levels. We will cover specific, actionable steps for anyone earning $50,000, $100,000, and $150,000 or more. We will reveal the critical shifts you need to make at each stage. This is the unique, practical guide you have been searching for. You might be thinking, is there anything else left to watch in this video? Absolutely. We are not just giving you a list. We are showing you the why behind each strategy. We will explore how companies, consumers, lobby groups, and even the government influence these financial landscapes. Understanding these forces will give you an unfair advantage. Stick around, because the insights we are about to share will fundamentally change how you view your money. Level 1. The $50,000 income strategy, building your financial fortress. When you are earning around $50,000 a year, your number one job is creating stability. This income level is all about building a rock-solid foundation. This foundation protects you from whatever life throws your way. The main challenge here is very little room for error. With a tight budget, one surprise car repair or medical bill can feel like a total disaster. So, your first mission is to get a death grip on your cash flow. You must track where every single dollar goes. The best way to do this is with a simple budget. A great place to start is the 50-30-20 rule. This framework suggests 50% of your take-home pay goes to your absolute needs. These include rent, utilities, transportation, and food. 30% is for your wants. This includes going out to eat, hobbies, and entertainment. The last, most important 20% goes straight to savings and paying down debt. Look, with the cost of everything going up, that 50% for needs can feel incredibly tight. This is where discipline comes in. It might mean getting a roommate. It could mean driving your car for a few more years. Or it might mean making meal prep your best friend. The goal is not to punish yourself. It is to create some breathing room in your budget. This breathing room is your first brick in the financial fortress. Once your budget is set, your next priority is building an emergency fund. You are shooting for 3 to 6 months of essential living expenses. If your basic needs cost you $2,000 a month, your goal is a cash cushion of $6,000 to $12,000. I know that can sound like a huge number. However, you do not have to get there overnight. Start by automating a transfer of $50 or $100 from every paycheck. Send it into a separate high-yield savings account. That pay-yourself-first habit is what builds your financial shield. It is what turns a surprise expense into a minor inconvenience. It prevents a catastrophe that pushes you into credit card debt. Speaking of debt, your third focus is attacking any high-interest consumer debt you have. This especially applies to credit cards. A credit card with a 15% or 20% interest rate is a financial emergency. Paying that off gives you a guaranteed return on your money. This return is equal to that interest rate. You are just not going to find a guaranteed 15 to 20% return in the stock market. This is a guaranteed win. Finally, let us talk about investing. At this income level, the single most powerful move you can make is capturing your full employer 401k match. If your company matches 100% of your contributions up to, say, 3% of your salary, you absolutely must contribute that 3%. It is a 100% return on your investment before it even has a chance to grow. It is free money. Passing it up is one of the biggest mistakes you can make. After you have secured the full match, if you still have room in that 20% savings slice, think about opening a Roth IRA. For 2025, you can contribute up to $7,000 a year, or $8,000 if you are 50 or older. That money grows completely tax-free. This is an incredible gift to your future self. So for the $50,000 earner, the plan is clear. Master your budget. Build your emergency fund. Kill high-interest debt. Grab that free 401k match. You are building a financial fortress, brick by brick. Level 2, the $100,000 income strategy, accelerating your growth. Hitting a six-figure income is a huge accomplishment. Congratulations! But it also comes with a sneaky trap, lifestyle inflation. The biggest challenge at the $100,000 level is making sure your bigger paycheck actually builds wealth. It should not just pay for a more expensive version of your old life. Your strategy has to shift from playing defense to playing offense. First, it is time for your budget to evolve. That 50-30-20 rule that served you so well? It is time to supercharge it. You should be aiming for something more like 40-30-30 or even 40-20-40. Here, you intentionally keep your needs and wants in check. This allows you to dramatically ramp up your savings and investment rate. You have more money to work with now. The only question is whether you will let it disappear into a bigger car payment and fancier dinners. Or will you put it to work for you? This brings us to the most important strategy at this level. You need to max out your tax-advantaged retirement accounts. This is your wealth acceleration engine. Your goal should now be to contribute the absolute maximum to your 401k. For 2025, that limit is $23,500. Hitting this number not only massively boosts your retirement savings, it also lowers your taxable income for the year. This is a double win. After your 401k, you should look to max out a Roth IRA. Be careful though. Around this income level, you might start getting phased out based on the IRS's income limits. So, double check if you are still eligible to contribute directly. Beyond that, it is time to use another financial superpower, the Health Savings Account, or HSA. If you have a high deductible health plan, an HSA is a triple tax-advantaged beast. Your contributions are tax-deductible. The money grows tax-free. Withdrawals for qualified medical expenses are also tax-free. For 2025, you can put in up to $4,300 for yourself, or $8,550 for a family. A lot of people miss that an HSA can also be used as another long-term investment account for retirement. It is a hidden gem. So once you have maxed out all those tax-advantaged accounts, where does the extra cash go? Your third move is to open a regular taxable brokerage account. Here, you can invest as much as you want without any contribution limits. Start funding it with low-cost index funds or ETFs to build a diversified portfolio. This is how you start building serious wealth outside of retirement accounts. It gives you the flexibility to save for other big goals. These include a down payment on a house or even retiring early. The key mindset shift at $100,000 is moving from asking, "Can I afford this?" to asking, "What is the opportunity cost of this?" Every dollar you spend on a lifestyle upgrade is a dollar that is not growing and compounding for you. By fighting lifestyle creep and automating your investments, you are paving the road to true financial freedom. Quick question. If this is making you rethink your money strategy, do me a quick favor and hit that like button. It really does help the channel. It tells YouTube that we are delivering value. This helps more people find this information. And you will want to stick around, because we are about to dive into the strategies for high earners. Here, the rulebook gets a complete rewrite. Level 3, the $150,000 plus income strategy, optimization and efficiency. Once your income starts climbing past the $150,000 mark, you are not just playing the game of building wealth anymore. You are playing the game of optimizing it. The biggest challenge here is not a tight budget. It is complexity. Your finances now have more moving parts, especially taxes. Your strategy has to get a lot more sophisticated. Your first priority is to look at every single financial decision through a tax efficiency lens. As a high-income earner, taxes are one of your biggest expenses. So, legally minimizing your tax bill becomes one of the best ways to accelerate your wealth. You should already be maxing out your 401k to the $23,500 limit for 2025 and your HSA. But now it is time for the pro moves. If your income is too high to contribute to a Roth IRA directly, you should be using the backdoor Roth IRA. This is a well-known strategy. You contribute to a traditional IRA and then immediately convert it to a Roth IRA. It is a completely legal way for high earners to keep getting money into that incredibly powerful tax-free growth account. This is a strategy that even the government implicitly allows, understanding the need for diverse savings vehicles. Your second strategy is to get serious about how you manage your taxable brokerage account. It is not just about funding it anymore. It is about being smart. This means using techniques like tax loss harvesting. Here, you sell losing investments to offset the taxes on your winners. It also means thinking about asset location. This is the idea of putting tax-inefficient investments, like certain bonds, inside your 401k or IRA. Meanwhile, you keep more tax-efficient investments like stock index funds in your taxable account. This strategic placement can save you thousands of dollars over time. The third big shift is to start expanding your investment horizons. A simple portfolio of index funds is amazing. However, with more capital, you can afford to diversify even further. This could mean exploring real estate. You could buy rental properties directly or invest passively in REITs. You might even explore private equity or investing in small businesses. This is if you have the knowledge and risk tolerance. These alternatives can offer returns that do not always move in lockstep with the stock market. This diversification is a key lesson learned by large companies and savvy investors. Finally, at this income level, it is time to assemble your team. Trying to manage this level of financial complexity by yourself can lead to expensive mistakes and missed opportunities. This is the point where hiring a fee-only financial advisor and a great CPA is no longer a cost. It is an investment. They can help with advanced tax strategies, estate planning, and making sure your entire financial picture works together. And things like wills and trusts are no longer someday items. They are essential for protecting the wealth you are now building for your family. Lobby groups often advocate for policies that benefit high net worth individuals, and having a team helps you navigate these complex landscapes. For the $150,000 plus earner, the name of the game is optimization. You are being proactive about taxes. You are strategic with your investments. And you are smart enough to get professional help to protect and grow your wealth. As you can see, your financial plan cannot just be set it and forget it. The strategy that builds your foundation at $50,000 is not the one that will launch your growth at $100,000. And it is definitely not the one that will help you optimize everything at $150,000 and beyond. At $50,000, you build your fortress with a budget and an emergency fund. At $100,000, you go on offense. You fight lifestyle inflation and max out retirement accounts. And at $150,000 plus, you become a master strategist. You focus on tax efficiency and smart optimization. Here is the bottom line. You have to be aware of what financial season you are in. You must use the right playbook for it. Do not get caught using last season's rules. By understanding these shifts, you can take active control of your financial life. You can start building the future you actually want. Thanks for watching. If this was helpful, subscribe for more straight-up financial advice. Check out our other video on the biggest money mistakes to avoid at any age.